Well, hello there, ladies and gentlemen. Good to see you again, and welcome back to Optimizing Your Financial World. I'm Ryan Ruff, your moderator today. It's great to be back with everybody on the show, and as always, I'm joined by Mark Wade, president of Echelon Family Office, and we're going to be diving into yet, of course, another wealth management-related discussion as we typically do on the show here today. And to frame up today's conversation, we're going to be diving into the idea of family banks. What are they? Well, family banks are a tool that some of the wealthy families across our country are utilizing for a number of different reasons on the table. And they're becoming increasingly more adopted by these successful families in today's day and age, especially with families across the wide gap of a different net worth spectrums. So today, Mark and I are going to be looking into whether or not family banks are a tool that maybe you and your family should be considering given your own needs. So with that, let's go ahead and welcome the man aboard. Mark, good to see you. How you doing today?
Hey Ryan, how are you? It's great to see you.
I'm good. I'm good. I'm doing well. It's a good topic we got dialed up for today. We're diving into, of course, family banks, how families can really decide whether or not this is one that they should be considering. So, Mark, let's just start with the obvious question. Why don't you tee things up for our audience today? What exactly is a family bank?
Sure. Hey Ryan, it's interesting. We love family banks. In fact, we have clients that are creating more and more family banks all the time. And basically it's a legal entity that a family sets up. There are rules that basically govern how family members can access money out of the family bank and how those family members are expected to pay the money back. And in general, it's family banks are designed really to bring a level of structure and professionalism and accountability to the family wealth creation process, right? Family members get ask for funding initiatives. The family bank can provide it, and basically, the family bank, tries to minimize the emotions that come with lending money to members in the family. There's rules involved. There's ways to govern it, and often it happens in their favorable terms.
Of course. All right. So let's double click then for just a moment into kind of that overall purpose of the family banks. Mark, what kind of initiatives do you see that they typically fund overall?
Yeah, sure. So, one of the major things that we see family banks being used for, many of the professionals that serve, wealthy families, affluent families, uh, find that, these family banks they enable the future generations and family members of those generations to build their own wealth and to use the wealth provided by the family bank, that money, those loans, to create their own entrepreneurial legacies and form their own businesses. Driven by that, it kind of tends that other wealthy family members who are looking to develop a family business or the skills to have their own family business. And that's a really important thing, right? We all know, give a man a fish, he eats for a day, teach a man to fish, he can provide for his family forever. So, these family members, it helps to support their new ventures, to help create uh, assets that they can use to help create their own new ventures. And also, just starting these family businesses, attaining higher education and other interests and needs that the family may have. That said, the family banks also commonly exist primarily to instill, and this is important, underline this, to instill the financial intelligence and the financial responsibilities and the inherited value of the elders in the family, those values. So the family bank is just a great tool to help do those things.
Yeah, Mark, no, that's a really, really good point. I want to get deeper into that. So, could you give us maybe an example that could help illustrate how that family bank would, like you said, build up financial responsibility among a family member?
Yeah, that's actually quite easy because there's one that's really common that everybody knows about. Let's think about how a family bank might approach the issue of helping with a child's college tuition. Rather than simply writing a check to the university, the matriarch or the patriarch could require that the college-bound child apply for a loan that would then cover 50% of the amount needed. The loan term, of course, would have a requirement that the child needs to maybe work during the weekends, on breaks and summers to help make loan payments back to the family bank. So, having this type of skin in the game, I like to call it, really, it could provide tremendous influence with how the child views the importance of that education. It's not just handed to them on a silver platter. There's real value behind it, and the child has to provide some of that value, as well as the way the child thinks about money and how the child thinks about spending it in general.
Yeah, absolutely. I like that you use the college tuition example. That's paints a really clear picture. But I do also want to circle back to another comment that you made earlier, Mark, about how family banks can be leveraged to really help out and address that that business building desire, that entrepreneurial spirit that some family members go through. So let's say we've got that college kid. They're exiting college now. They've got that entrepreneurial spirit and business building desire. How might the family bank help them in that phase of life?
Yeah, great question. So, you know, not everybody is cut out for corporate America. Many people grew up in family businesses. Many people grew up in entrepreneurial families. And so that's often how they end up in their career, right? They often end up working in either the family business or starting their own businesses. So family banks are often set up to help family members build their own entrepreneurial endeavors. The funds can be provided, by a family bank. These are, by nature, they're intra-family loans, and so, equity investments in the new entrepreneurial ventures, well, in addition to loans, can be both. So the financing provided by a family bank could be in the form of a loan and or a direct investment into the new venture. So, for example, let's say, a patriarch might loan his daughter money through the bank, but so she can start a consulting business. So the daughter agrees to some type of repayment terms, at, of course, a preferred rate than what might be available through traditional commercial banks. So, another way is, many family banks are designed to foster the creativity and the creative talents of the next and future generations. So, they try and build the human capital along with the financial capital. The family bank is there to help build people as just as much as it is to help build businesses. So some of the family banks incorporate formal and informal entrepreneurial education and mentoring support. Think about that. There are so many things that are not taught in colleges and universities today, especially about entrepreneurial endeavors and small businesses. What better way to learn those things than through your own family and with the financial support of your family along with it?
Mark, I love that. It's a really important note there to make that there's not only is there a legitimate wealth component, of course, to the family bank, but there's also a knowledge component here. I appreciate you mentioning that. I do want to take the conversation kind of down a different avenue now. We've been talking about how these family banks are formal legal entities. But when you think about families, I mean, look, families in and of themselves, look, we loan money to different family members, in very informal ways, throughout our lives. So why would you say then it is so important for a family bank to be very buttoned up and very formal, for lack of a better word?
Wow, it's it's so critical because when you think about supporting the entrepreneurial activities of the younger generations and doing so through informal arrangements that lack legal documentation. So here's $200,000, pay me back someday. That sometimes, which is code word for oftentimes, that usually ends up in a gift, okay, or some type of failure to repayment. So these informal arrangements, oftentimes increase the possibility of family conflict. For example, let's say you have two family members uh, uh, who might remember the agreed upon financial arrangements somewhat differently. Those kind of situations can become destructive to family harmony and family unity. like, like when the senior member of the family dies and there's no documentation concerning the existence or terms of a intra-family loan that he made to one of the children or grandchildren. Think about all the conflict that that can cause among family members. Well, grandpa loaned you that money. Didn't he tell you, hey, you had to pay that back? Well, no, he never did actually. And there's no documentation to support it. So, ultimately with family banks, accountability is paramount. So family banks are not just pools of money that family members draw upon, whenever they see fit. Obtaining funds from the family bank is a bit like getting funding from a venture capital firm or from a commercial bank. The transaction really has to be established and with well-documented terms and criteria for repayment.
No, it makes sense. You want to make sure everything's buttoned up, especially when it comes to these types of things, especially if we're talking substantial sums of money where there's maybe entrepreneurial investments and spirits tied to that, those gifts or those loans. So appreciate you clearing that up for us. And as we're going through this conversation, what's seems to be kind of a central theme with a family bank is that it really does involve lending that is very customized or very tailored to a family member's specific goals and situations. Am I correct in saying that these are very customized banks that are specifically addressing a given family's need? It's not a one size fit all, if you will.
Yeah, Ryan, that's such a critical element to designing these family banks and creating these banks because, you know, it can be very different dealing with a family bank than dealing with a large financial institution. And it's supposed to be that way, right? Family banks tend to do best when, we help to set them up to serve I'm going to say, often there's idiosyncratic needs, often the very specific needs and wants and nature of a particular family, So and as well as that family's specific circumstances. Let's face it, everybody's circumstances are different. So that's why, some exceptionally wealthy families with single family offices choose to establish and run these standalone family banks while others, go through the process of, running their single family offices without setting up another entity. It's all a matter of what the particular peculiarities of a particular family are. So regardless of what those, idiosyncratic needs are, there's always the need for flexibility. Family banks tend to evolve from being very simple to fairly complex at times, and it's wise for the family bank to have plenty of built-in flexibility when they're established so they can adjust as the needs of the family changes and the family circumstances change. So yeah, it's different dealing with a family bank than a commercial bank or a large financial institution. By design, they're set up to accommodate the special needs of families, and they're extremely flexible with regard to how they operate.
Well, look, Mark, you've been outlining a lot of benefits of leveraging a family bank, should somebody, be in a situation to operate in that capacity. But at the same time, I kind of want to define what that means. So as we sit here talking about family banks, I'm sure a lot of our audience is wondering, well, is this something that's applicable to me, or is this something that's only applicable to, let's say, those that a family that has a truly sizable net worth? I mean, you mentioned the super rich earlier. Is this a solution that's only reserved for them, or is it more widely applicable to different net worths and different families?
Yeah, thanks for bringing that up. I probably didn't alliterate as well as I should have in that last answer, but so even though this whole concept of family banks had its genesis in the realm of, super affluent families in the United States, the Rockefellers, the Carnegies, the Mellons, Vanderbilt, so on and so forth. Uh, they kind of led the charge in this area, and they really came up with the basic designs of how these family banks operate. But they're not the exclusive domain of the extremely wealthy, right? Because families with considerably less wealth, they can use a family bank also as a lending and an investment vehicle to support the commercial activities of their heirs. So, when you think about the exceptionally wealthy and how they move assets around in order to fund their family banks, those with a less wealth are not always in such a financial position. Instead, they may need a pool of money that family members can use, like we said, in the form of loans, whether it's for college or to invest in housing or to invest in new philanthropic activities or in new business activities. So a family, for example, might be able to use a tax-free buildup from certain types of life insurance to amass wealth that family members can use to fund their own entrepreneurial endeavors later on. And that's an activity that has proven to be so effective and so efficient. And I know we conduct those all the time. That funding these family banks with different types of life insurance in addition to investments is a fantastic way to keep Uncle Sam out of your pocket.
No, this is great insight, Mark. I appreciate you clearing that up for us. That this is a solution that can be widely applicable to different families out there. Mark, we have a lot of conversations on this show, regardless, it seems like, of the topic of the episode. It seems to come back to a core, kind of theme, if you will, and that is it helps to have a team. It helps to have a team of professionals working alongside you. So let's revisit that theme, but in the sense of a family bank here today. Do these family banks, do they get set up and run essentially by the family, or does it really make sense and pay off to have, that team of professionals that are working alongside you to run it or run it for you even? Where do you fall here?
Well, another great question. And let's just start by saying, look, every situation is slightly different, right? So they're all different variations. But in general, families that set up family banks, they regularly use outside experts to help assist and at least advise them. People like myself, wealth managers and virtual family offices, attorneys, accountants. And generally what these experts are looking to do and provide require a few different, specific characteristics, right? And one of them is, the insights and experience with wealthy inheritors. I mean, we do this all the time. So familiarity with family dynamics and understanding, the different perspectives and needs and wants of the next generation. These are essential to ensuring, that the accountability and the meaningful return of investments are there because they need to cooperate and participate with although they're flexible, but within the rules of the family bank and the funding being provided to them. Then there's also, let's talk about, you know, expertise and experience in dealing with entrepreneurship. Well, that's kind of the core and backbone of our four operating companies that we have. The ability to provide tactical guidance in addition to, the investments and private enterprises and helping them make and grow, their enterprises is really critical in supporting the heirs in their entrepreneurial endeavors. And then there's the almighty tax expertise, the tax mitigation and experience. You know, the affluent make considerable use of tax specialists. Uh, we're no stranger to that. And, they do it to help minimize income and estate tax liabilities. And with the new ventures, there can also be substantial opportunities to reduce current and future taxes too. So, yeah, being able to leverage outside experts, um, and the way we do it at Echelon Virtual Family Office is oftentimes we help introduce our clients to the appropriate experts who come in, do their job, and when they're done doing their job, they go back to serving other clients too. So we have, we're very application specific with how we bring our experts in, and we have a network of 65 around the country currently that we're using. It's changing on an ongoing basis, and in doing so, they work extremely efficiently. They know what to expect from us and from our clients, and they operate quite cost effectively.
No, Mark, this is great. And speaking of your team at Echelon Family Office, you guys have not just conversations surrounding, those key characteristics you just mentioned and what you provide for clients, but surrounding, of course, the central theme of today's conversation in a family bank. So, for anybody out there in the audience that let's say their interest's been piqued by today's episode, and maybe they are now interested themselves in opening up a conversation surrounding a family bank for them and their family, what would be the best way they could get in touch with you and your team to start that conversation?
Sure, Ryan. Uh, they can visit us on the web at www.echelonoffice.com. That's ECHELON, the word office.com. They could dial in at 888-892-9882. Or if they like, and I promise I answer all of my emails, they can reach out directly to me at MWADE, that's M Wade at echelonoffice.com. Again, ECHELON office.com.
Fantastic. Well, Mark, look, I know you've got a lot of clients to serve, so we'll let you get back to doing that. But I appreciate you carving some time out of your day to jump on with us and talk some family banks. So thank you, and I'll see you on the next one, Mark.
Thanks, Ryan. See you next time.
Of course, of course. And hey, folks, we want to take one final moment, as we always do, and thank you all for stopping by and spending some time with us on the podcast today. If you took some knowledge away from today's episode surrounding family banks, well, make sure you hit that subscribe button then on whichever platform you checked us out on today. That way you don't miss out on a future conversation where Mark and I break down a different wealth management component and conversation overall so that you and yours can come out better for it and maybe a little bit more enlightened on the other side. Before Mark, I'm Ryan. We're going to go ahead and say so long today, but we appreciate you stopping by and being with us on optimizing your financial world.